Hey guys, Craig from Wattle Accountants. Today I'm going to talk about tax for holiday homes. For those lucky enough to have a second property as a holiday home, well, congratulations, that's great. But unfortunately, there may be tax to pay, and in most cases there is. The first scenario is where you are renting that holiday home, whether it's through an agent or you're putting on Airbnb. So in those situations, you're collecting rental income, so that needs to go in your tax return. The expenses are also deductible, which is going to help out there. Another situation will be where you're staying in the property, but you're not renting it. So if it's always available to you, but nobody's ever staying, and you're not charging, not collecting any rent. So in that situation, you're not collecting any income. So there's nothing to report in your income tax return. Pretty simple. The expenses are non-deductible because, well, you're not claiming them. So you're not reporting any income. So nothing needs to be done there. There is one thing to be aware of in both scenarios is if it is a second home, it's not exempt for any other reason. It's assessed like any other sale of property or shares or any other investment. So there's maybe capital gain tax you got to pay. So if you've bought it for $500,000 and it's $1 million, there's a tax to pay on $500,000 there. So just be mindful when you do sell that there may be some tax to pay. Another common scenario that comes up often is where you may stay in the holiday home for say half the year, but then the other half of the year that you're leasing it through Airbnb. So just keep it simple. So in that scenario, the rental income that you collect, you've got to report that. That's pretty straightforward. The expenses though, you've got to be a bit careful. You've got to portion it based on a reasonable basis. So something like a commission, Airbnb commission, that's going to be fully deductible because it relates to that rental income. With something that goes over multiple periods, maybe like a land tax, council rate, body corporate, those sort of things, because it's covering a period where it's used for private use, you need to apportion it. Usually it's based on days. So just be mindful of that when you, if you are using it and also leasing it out. Another situation that comes up often is if you are letting a friend stay in it, but they're a very cheap price compared to what you can charge in the market. So we'll take an example of, one property you may charge $500 a week on Airbnb, but your friend stays in it for $250 a week. So in that situation, you got to report the income just like the other scenario. But with the expenses, you'll need to apportion it based on the reduction of the rental income. So because we can get $500 a week, but we're only collecting $250, that's a 50% reduction, which means any of the expenses that we have for that period need to be reduced by 50% as well. That's obviously to make things fair. ATO will pick this up very quickly because the rental income will be very low and the expenses will be very high, so it would just look very obvious. So just be mindful of that if you are not charging market rates. They know based on postcode, that's how they data match, and they can find that. So yeah, thanks for watching the video. If you liked it, give us a like. Any comments, feel free to put them down below. Otherwise, thanks for watching the video.